Pell. I'm CEO and founder of both companies, and today we're going to have a live trading room open to trade stock and options using our technology. For those of you who are new, welcome. This is my brief bio. Disclosures are very important. Please read them. Trading stock and options involve risk, not suitable for everyone. You can see a relationship between Tradespoon, Yellow Tunnel, and Avant-Garde Trading on the bottom of your screen. All right, let's jump into the market. So the main chart, well, first let's look at Tradespoon analytics, right? Just look at the AI even before the escalation in the Middle East. Spiders neutral. Spiders is neutral, basically saying that as we approach an earnings season, next week's earnings season starts, we could retest all-time high, right? On the downside, doesn't see a lot of momentum below 730. We were at 739, so we tested 739. Model predicted for today 738.18 and 749 is estimated high. So model doing a good job, basically telling you that when the market reaches 738 or 739, it's oversold. This is where you want to initiate your long position, right, or add when you're trading, whether you're trading long-term or short-term signals. This is where you want to consider adding or going long, and this is where you want to consider maybe trimming your position or short position. So model is doing a good job, determining support and resistance levels. We're currently at 744, 745, close to session high, 746. So we had a nice bounce off a 50-day moving average, exactly 50-day moving average. QQ is actually turning positive. Semiconductors are turning positive. Looks like they're rebounding, so that's positive. VIX is back at 16 level. We had Fed meeting minutes. We had escalation in the Middle East. Interest rates, that's the number one chart that I'm concerned about. The interest rate, we're at 460. They're overbought. Potentially not that far from the highs during the war in the Middle East, right? This was a peak of the conflict. Second week of May, we were at 466, and we're now not that far away from these levels. Crude oil is significantly lower than it was in the middle of May. Still below 200-day moving average, and Bitcoin is 62,000. So these are the most important charts. Crude oil, right? If crude oil gets above 80, I think I would be concerned. If Bitcoin drops below 58,000, I would be concerned. If 10-year, gets above 470, I would be concerned. If dollar gets above 102, I would be concerned. Those are all negative data points that would push the market further to the downside. Right now, Spiders is trading in the range. It hasn't really done anything since the beginning of May, sitting at the 50-day moving average. QQQ hasn't really done anything since the beginning of May, sitting at the 50-day moving average. So that's the setup. Small caps down 1%. Gold miners breaking down. So we did have a brief gold miners pullback, made new lows June. Silver didn't make the new lows, but close. Consumer staples stable. Platinum is weak. China, rebound in China, and then rotation back into momentum names. Right. So everything that rallied today pulls back. Right. Google is down 2%. Microsoft is down 1%. Amazon is down 1%. DRAM is turning positive, 1%. But Deere is down right at the 600 level, and Boeing is down 3% right at the 50-day moving average. All right, any questions? So debit put spread. Let me look at the debit put spread. What happened to it? Debit put spread on QQQ. Did I get fill? Well, this would be in here, Tradespoon. Elite trading circle. So I don't see QQQ debit put spread. You know what, Naji? I don't see the QQQ put spread. I know I traded around it, but I never bought it back. So I assume you're talking about 700, 690 put. So I closed it. I never bought it back. I mean, if the rebound continues, I would maybe buy the QQQ put spread. But for now, my last transaction, I actually bought QQQ stock. To jog my memory. Yeah, email me my trade confirmation. It was filled. We did have a GTC order, but I got filled back in June 26th. So I'm out. Maybe it's a delayed email, something like in email box, maybe. I mean, yeah, send it to me. I want to see when it was sent. In theory, this was filled on June 26th. And you're right, it is a GTC order at 3:30, and it did get filled, but not today, June 26th. But yeah, send me maybe something happened. Oh, Najee, maybe. But yeah, so that trade, I'm out. I would now target August or even September QQQ put spread. But I mean, it's oversold. It's probably too late to hedge unless we take out the 680 level. If we take out 680, I would hedge. But right now, I'm actually inclined to see if we can get back to 740. You can see Dell is up, Qualcomm, LRCX, so all the AI names except AMD are up, right? And software is the one that pulls back. Any other questions? All right, so let's go through the positions, the rest of the position, just make sure we do the earnings power trader. So Amazon, I did trim Amazon position at closer to 250 level. I still have Amazon. It's pulling back today. I mean, the 200-day moving average, I would consider maybe 235, 230. I would consider buying back the shares that we sold near 250, 245 level. So that's Amazon, still holding Amazon. Small caps, kind of not going anywhere. Briefly touched 50-day moving average around 290. I think if you have cash, maybe at 290, 280, I mean 270, all buyable levels. For now, no changes to IWM. DRAM, this is July 26th, so I do have, after this week, I still have 2 more weeks left. So that's the good news. All right, July 17th. Sorry, still next Friday. I misunderstood, misread. July 17th. So I do have, after this week, 1 more week. So next Friday expiration, 70, 80 calls. So DRAM needs to rebound, right, this week and next. I mean, it's not making new lows. It's sitting at the 50-day moving average, but it needs to have a follow through. So for now, I'm still waiting on DRAM. I mean, August I have time. July, I don't have a lot of time. Carrier continues to be weak, CARR. Sorry, let me sort them again. So CAR is weak, sitting right at the just broke 50-day moving average, and not that far away from 200-day moving average. It does have support here. Industrials in general are weak today, whether it's General Electric or Caterpillar, approaching the support level. So it's oversold, not making any changes. I'm not down 2.5%, so that's good. So I'm gonna keep monitoring CAR. Citigroup did pull back. Industrial financials pulled back, kind of rotating back to the momentum names. I mean, you do have support 132. We are approaching earnings season. You know, if it gets oversold to 50-day moving average, maybe buy, you know, another spread or sell put spread into the earnings. But earnings is next week. Talked about IWM. Microsoft, I trimmed Microsoft. Microsoft pulled back. I think, you know, 370, 360, I think is buyable levels for now. No changes to Microsoft. We talked about QQQ. I added to QQQ at 710. I did trim XYZ stock. I do have an option that expires this Friday, so 73, 78. XYZ pulled back today and it's trading at 70. So it's in the money now. So it needs to stay above the 75 level, right, for me to make money. So it briefly touched 20-day moving average. It's bouncing back. We'll see what the market is going to look like next week. And Apple 302, 307.5 puts call spread. That's the trade from this week. So far, it's doing good. It's right at that session high. I have ordered to close at 420. It's right at that level, $4 maybe. So it's getting close to the exit. Apple. XYZ is trading at $3. So that's still away. Any questions? In terms of the rest of the market, let's see. Anything else stands out? Retail stocks pull back. The 200-day moving average. So retail stocks are weak on the higher oil prices and escalation in the Middle East. Metals and miners are still weak. Consumer discretionary is weak. Healthcare, strong, right? Very strong healthcare. You still have reversion to mean, right? Where technology is underperforming and healthcare is outperforming. And that's a bearish argument. You know, that would be people don't have a lot of risk appetite right now. Utility is stable, not going anywhere. Consumer staples not going anywhere. Technology, XLK is bouncing back today, so that's positive. And industrials are at 180. So pulling back, but sitting right at the support level. Just checking my personal account, see if I want to add QQQ as well. Okay. Any other questions? So industrials pull back to the support level, 177.5. Banks, 20-day moving average, pull back today. Energy rebounded. Home builders continues to pull back. VIX is at 16, or as high as 19, but definitely rebounding. That's about it. CIWM 293. All right, it's 2:45. Any questions about stock forecast toolbox earnings? So hold on. Delta Airlines, we talked about Delta Airlines. Earnings is going to be on July 10th, on Friday. We did talk about sell and 195. And Delta Airline pulled back today. So I sold 95.96 call. Pepsi down, bounce back down. Let's see. How's Pepsi usually doing in July? July has been a good month for Pepsi. It's not a volatile stock, so I don't think it's going to move a lot. Maybe 4 or 5%, 2, 4, 7%. So 140 strike. Let's see, Pepsi. It's been going higher lately. So 140 is your put wall. Expectations of 140. So you can sell 140. Let's see how much is 140, 141. So this Friday expiration 140. That's where the highest concentration is. So let's see. So 139, 138, you can get 25 cents. And that would be here. And if you want to go lower, 138, 137, 14 cents, 15 cents. So 138, 137 put, that would be outside of it, would be somewhere between these two strikes, with expectation that Pepsi is not going to break below 139. Okay. You can do the same thing on the call side if you want to get more premium. And this is when. So that's tomorrow before the market open. And then on the upside, $148 strike. So you do have a lot of position at 155. 150, 155. So here, if it's great earnings, it could hit 155. So, you know, you could buy Pepsi call. Right? I mean, a lot of people think it's going to get to this 155 strike, which is what? Call 51,000 contracts. So it's a lot. $150. So if I go to next week, July 17th, and target 150, it's about $1. If I do 155, so 155, 67 cents. So I can go in, buy vertical spread. Let's see, 150, 155. I mean, if you don't think it's going to move, then you use risk less. So, okay, so let's do steps. Maybe just do vertical put spread. Sell 138, 137. Trade option. Pepsi. Let's just make sure I have it here. Yeah, Pepsi. So $1 spread. $138, $137. $0.13. Well, so if you go to earnings power trader, you would see it under earnings power trader or elite circle. So for now, I'm just going to sell. On my personal account, I bought the call spread, small position. Here, I just want to get the 12 cents. Risk 88 cents to make 12 cents, so 15% return. And if you want higher return, you would have to either sell call spread or buy long call spread with the idea that will move. For now, I'll leave it like that. Let's send an email. So we'll do earnings power trader. I don't know if you guys have any questions. So selling 138 call put, buying 137 put. This would be open Pepsi spread. Okay, Tahir, Nadia, any questions? All right, if there's no other questions, then that's all I have for today. Thank you very much and have a great day.